Okay, welcome everyone. Let's get right into the stock market chart technical analysis. We're going to look for trade ideas. So I'm going to point out a couple things that I'm seeing today, and let's get started. Triple Q's tech sector. All right, so I've adjusted my line a little bit on this hourly chart. We've got this trend line. I've got it marked here in blue on this hourly chart. I'm watching for a break at this level right here. Right there, some sort of a break. I don't see it yet, no sell signal yet, but again, we're just looking for that. That's really the only thing. Besides that, if you go to the daily chart, we are continuing to make an uptrend, trending upward, and no real indication that the trend has changed or reversed. So that's it. That's all I'm looking for on that one. Small caps. This one's kind of interesting, coming back into what should be support. So you'll see here on the small caps on this daily chart, we're looking at IWM here, big sideways trading range. I got it kind of marked in green right here. I'm going to just extend this out. This is the big range that the small caps have been in all year long for 2021. We had a breakout, so there's your breakout. Good. That's a decent breakout. There was some volume that came with that breakout. Coming in for a back test of that, with what should be trendline support, sitting there at about 234.50 or so. So we're just about there. It could go a little bit lower. We might see it dip just down around 233.50. Anywhere in that range, you should expect the buyers to be there. So if the buyers don't show up, then, and we break back below, we're not able to recover, then I'd look for a move all the way down to the bottom of the range. Okay. Otherwise, we should, this is where the dip buyers should be at. This is where it should bounce and, start to move higher. So trade it whichever way you like. That's the key level that I see. Again, you could trade it either way, but I guess, if I was going to trade it one way or the other, I'd probably look for it to kind of run some stops right in here and kind of chop around and then recover. And if you get that recovery, that's probably where I'd want to step in long and have this thing go higher. Otherwise, look for a sell signal. You see that big breakdown candle. That's like your sell signal, and then I trade it down to this range. That range, the lower support area is about 209, 208.75, somewhere right in there. Looking at the hourly chart, we did have some negative divergence right up here. So you'll see how the price on the IWM kept going higher right in here, and yet the momentum started to top off right about there. Let me mark that out. It's right about there. If I can grab it, right in there. See how the momentum starts to drop off on the RSI, and the PPO really started to tail off right in there. So that's your negative divergence. That was indicating likely a trend reversal. And then, you draw your trend line here. Your sell signal, and this is just small time frame things, active trading, but your sell signal really came right about in there. If you took that sell signal, that's a move so far of about 3%. And we're coming into support. So that's it on that one. These ag commodities seem to be ripping to the upside, potentially starting the next leg higher. Look at coffee. Here's Joe. You can see just making a new high within, looks like we've completely bottomed out, and these ag commodities are in a longer term bull market. I don't see anything that I want to buy here on coffee. Soybeans looks kind of interesting. So soybeans has this downtrend line. Soybeans corrected from the highs down to the lows about 16.5%. And down here, I just started to notice it, but down here you can see that's a divergent, that's a bullish divergence. So made a new lower low in price, and yet momentum was moving higher right there. So there's your bullish divergence in soybeans, and there's your buy signal right there. There's a breakout and a buy signal. So it's a buy on soybeans. I'd look to buy on pullbacks to support. I don't have a position, but if I could get one, if we get a back test of this trend line, that's a buy. Anywhere along there would be a buy. Or, even at this 22 area, looks like some support. When I roll that out, looks like that was kind of a key level right there. So, and we're breaking above it today. So in general, looks bullish to me. It looks like we're going higher in this one. Corn, or this is sugar, continuing to kind of move higher. Corn looks to be, moving higher. Wheat looks really bullish. You can see wheat, this thing's just on a tear. From the lows back in about, March 2020, basically, this thing's already up 64%. So, and continuing to trend higher. No reason to buy it up here. You know, I don't buy all-time highs. I buy pullbacks to support if I want to go long. And, you know, same with shorting. You know, I don't want to short a breakdown. I want to short rips into resistance. So if you're new to these concepts, technical analysis, check out the stock market training course, link in the description of this video. So check that out. Oil is starting to break down. So here's CL, oil futures. You can see it looks like we're starting a downtrend. We kind of topped out right in here. Started to put in negative divergence. I can kind of mark that out if we want to look at that. There's your negative divergence right there. See how we start to drop off on the momentum? And yet price still didn't get the you know, we were still kind of popping, making new highs right in there. Not a huge divergence, but something to look at. And now we're starting that downtrend where we're making a new lower low today. So you can see, you know, we're basically working lower. We got a new low today. So a clear downtrend, at least in the short term. Where's oil go to? Well, there's some support right here at about 75.40. So we could find some support there. And let's see if we can find another level of support. Looks like there's a little bit of support right in here. Yeah, right there. That's about 66.75. So anywhere in there, I don't expect oil to pull back that much, but definitely could get down to the 75.50 area. We're about halfway there. So looking at DRIP, I took a position in DRIP today. It's profitable so far. This is a 2 times leveraged bear ETF against oil. So basically, and gas, basically the oil and gas exploration companies. So this, I'm looking for some sort of a short-term pop. Seeing oil starting to soften up. So we should get a pop here. Key levels to really watch on this one. We're probably just going to go to right here. We'll probably just look for a move and gap fill. We got a gap right here. That was former support. That puts us up around 662 for a move where we're at of about 34, 35%. So that's kind of the trade idea. We've been rejected. We've been kind of basing out at this kind of grinding lower right in here. And this one has decay. So if oil's not going to fall and it just goes sideways, this will continue to move lower because they trade options and leveraged positions to get the leverage out of this futures. And so they have to roll those over. And so you're going to get decay. The way you want to trade these leveraged ETFs, you want to trade them in a trending market, whether trending up or trending down. They'll outperform in a trending market. A sideways market, these will continue to lose money. They'll continue to decay. So, you know, they're short-term trading vehicles. If oil continues to fall, I'm looking for a pop here, and then I just bail on it and take the profit. So that's all this is. It's not a long-term thing. I never hold these long-term. And gold, you can see gold dipped a little bit yesterday, but right back up again, up $17 today. As far as I can tell, gold is bull trending, making the next leg higher. It's a buy the dip market in gold. It looks to me like the inflation trade is coming back on full steam. So it took a little break, gold being one of the leaders of the inflation trade. You can see we've basically been correcting in gold since August of 2020. Again, go back and watch my videos. I was selling all my miners back in this area. When we saw this big rip, I bailed out of all my miners. I didn't start getting bullish again on the miners till about right in here, back in April of 21. This is where I started to get bullish. Been building a position little by little every time we pull back to certain support levels. And at this point, I have a pretty sizable position in the gold miners, continuing to trade those long. They're all starting to be pretty profitable at this point. So looks like we're continuing the uptrend. There'll be pullbacks along the way, so we'll look for pullbacks to support. Near-term support on gold, we're probably at least at some point going to get a test of this level, 1833. We might, run down, hit that, maybe undercut it a little bit, run some stops, and then recover. So you see that, you see a move down there, and you see the recovery. That's pretty bullish. And the miners in general, here's GDX. Nothing really going on, kind of flat today. Some of the individual miners are doing really well. Newmont's kind of soft, so maybe that's what's dragging this thing, kind of keeping it flat. Newmont being the largest gold miner, but I'm seeing a lot of these smaller miners. Here's HMY. Look at this one, up 4.5% today, continuing to just clearly uptrend at this moment in time. You can see We were downtrending, making a series of high or lower highs, lower lows. We put in bullish divergence down here. I've talked about this in my videos. See the bullish divergence that was building. It was really building all through here. And then we got the buy signal. There's your big breakout candle. I've got it kind of circled. There's your breakout candle or buy signal. So if you took that buy signal, even if you waited to the end of the day to take it, you're profitable now on this one by 26%. All right, so that's, you look at the SPY in this period of time, and the SPY's up 3, maybe 4%. This thing's up 26%. So vastly outperforming, even, outperforming some of these tech stocks. And I think that's going to continue. I think these miners are going to continue to outperform the market because if the inflation trade is back on, and that means when I'm talking about the inflation trade, I'm talking about hard materials. We're talking about copper, oil, ag commodities, gold, silver, things like that. And if that's back on, then gold often will lead that position. So going back to gold bullion, this is where gold was leading. The oil stocks hadn't really rallied at this moment in time. Oil was still in kind of down in the lows, and the ag commodities hadn't really rallied. Gold took a breather while the ags and the oil stocks all rallied, and now I think it's gold's turn to resume and lead the inflation trade. So a lot of people get discouraged because they hear about all the inflation, and yet oil or the gold stocks had sold off. That's because they led the move. They take a breather, wipe out all the hot, kind of the hot money, basically, all the momentum traders that are chasing the market higher, kind of clears them out. The smart money starts to buy and accumulate as we start to build bullish divergence, start to run into the long-term support, bull trend support. See that red line, how I have it marked out? That's where the smart money wants to buy it at, all right, down here at the support levels. All right, and they accumulate positions, and then boom, it runs higher, makes the next leg. As we make our next leg, we look to start to take profit and sell. That momentum trade will come back. It's always there, that hot money where they start to chase things higher. They'll come back and we sell to them. The smart money that's accumulated at key levels of support, we unload our positions to the to the momentum. Some of those and those momentum traders, they always feel like they're right, because, and especially towards the end of a move like this, because they're right away, right? They jump in, they buy something, and they're instantly profitable because it's just a momentum trade. It's just moving higher. But oftentimes that's the ending of the move. So if you get in early on the momentum move and you trade it right, yeah, you can make money. Most people get in towards the end or near the middle. They're right away. They feel good. They don't exit their positions because they're profitable. They think things are going to continue forever. And then you get the big, and I can zoom in, then you get the big downward move like that, which pretty much puts them underwater, and they all start to exit. A lot of them early on turn into long-term investors. They'll be trading it, everything's great, and then when it dumps and they go negative and they start to take on losses, they change their mentality and say, I'm holding for the long term. I'm a long-term investor. And then it continues to grind lower and lower, and eventually they capitulate. It just wipes them out, and they eventually just have to get out. And that's that's when the smart money is starting to buy that back from them. So just a little market dynamics right there on that one. Okay, let's look at some of these long trade ideas. KHC, still like it long, but it has been range bound somewhat. So on this one, we had this downtrend line right here. We had bullish divergence. See it right there? It's just building. Momentum's moving higher on both momentum indicators. We got a buy signal. Right here, let me just kind of mark that out. Buy signal came right there on that big breakout candle, and ever since then it's just been kind of range bound. So one way or the other, I need to see a break of this range, and that's going to likely give us the next direction. Break to the upside, 37.80, something above there would be a buy signal. Next buy signal, I guess, and 35.77 would be a breakdown. Whichever way we break is the direction I think we're going to trade. If we break down, I think we could even come all the way down and make another tag of this 32 area, which is this downtrend line. I don't favor that. I think we're actually going to break to the upside because of the bullish divergence. I think we're going to break to the upside and run up and do a gap fill all the way up here at about $48, and that's a big gap from back in 2019. I'm looking for that gap to fill. All right, so you might not want to wait for the complete gap fill, but as you get into that area, maybe around 47, approach that gap. That's likely the area where there's going to be a lot of sellers waiting, and I'll be one of them. So again, still looking for that move up, still holding that one long. Clorox, this one, I don't have a position in this one, but again, it still looks constructive. You can see here, bullish divergence on the RSI and the PPO. As we continue to drift lower, we got a little bit of a breakout right there, and we're just kind of grinding higher. This one's not going to be a big mover or a fast mover, but I think it's going to continue to grind higher up into this 178, 179 area, somewhere right in there. That's a gap fill from back here, so I think it's likely we're going to run up and fill that gap as a trade idea. Zillow, no long on this one. This one's just Trainwreck City, but it has been, there's been a lot of selling in this, so I'm looking for a potential bottom down here at 55, 54. I don't see any indication of the bottom right now. In fact, all I see is more downside. I see lower momentum. See how the PPO is just trending down. RSI is kind of basing out, but the PPO is still trending down. Lower momentum, lower price, but I am looking for, maybe some support down here at 55.40. We'll just keep this on our watch list. Okay, guys, I've just been scanning around for the last 10, 20 minutes looking for anything else. I'm not seeing anything else, so I'm going to wrap it up here, guys. Leave me a thumbs up on your way out, and I'll catch you on the next one.